weekend all. Ira Epstein of Linn Associates with your weekend edition of your financial market wrap-up for this Friday, the 18th of October, 2019. And we're right now about 3:20 p.m. Central Time. And as you can see where the stock markets are, that'll be where the settlement comes in. That's why I'm doing it right now. You can see metals a bit lower, but copper up a whopping 400 points. That's a big move in the copper market. It's a good sign, but of what, I'm not exactly certain. Dollar near the lows of the day, and you can see the pound up, got up yesterday into that 130 zone. It's knocking on the door of it again. And the question, of course, over Saturday is going to be, do they vote on the Brexit proposal Mr. Johnson is bringing to the table, or will he be thwarted where that session ends up passing a bill where they don't vote on it, and that puts him, and I'm talking Mr. Johnson, right into the 19th, where he's supposed to ask for an extension from the EU. It's going to be an interesting political time. If they do vote, does it get passed? You're taking a lot of risk on this, obviously, over the weekend because you don't know what's going to happen. A little bit lower on the energy markets as we're looking at them. Grain markets, a bit of a bid into the wheat and the beans, but not the corn. Harvest is well underway there. So let's go to the markets and see what we do have. Now, as we take a look at the E-mini S&P 500, you're well over the monthly 18-month moving average of closes. That gives the market an upside bias. Something else is important. On a monthly chart, and we're not at the end of the month, for the mid-month, this would be the highest high that we've had on a closing basis in a while. A monthly chart looks at the last day of the month, and that determines the settlement, but the market certainly has that upside bias. Now, when we come to the weekly area chart of closes, that's different. We already know this is the settlement. The market had corrected down back to that 18-week average of closes and has held it. The pattern is pretty clear that you got higher closes here and a higher high. The weekly trend is up. It gets broken if you come back and you close underneath right here. That would be the week of October 4th, 29.51. That would put the market on a weekly basis. It would have to be there. Lower high closes and then a lower low. That could be the problem for the market. I'm not saying it's going to happen. That's the what if. The other thing that's been going on, even on the daily charts, you've rallied into key resistance areas just like you've done on the weekly. You're at a big number right here. That's not to say you can't get through it. I mean, let's face it, we've had a ceasefire in Turkey. We've had good news in the sense that the U.S. and China are on a pause. I don't know if they'll get to the phase one. I'm assuming they will. Then they'll get on to phase two. We've got impeachment proceedings that every day it just takes up the news. And this market's not done bad with all that. It's been able to absorb it. I say friendly because when I look at the swing line, and if I throw off the name of the chart, I have a clear pattern of higher lows and a higher high. We don't know where this high is going to peak out yet. So far, it's under that last one, but we know we're in a resistance zone. We also know that on the closing basis of 29.8825, the market settled over the 18-week average. Now, admittedly, we have been fighting at that for a long time. We're sort of stuck right in this zone. You got over it for 3 weeks right here, and then since then, you've been hitting it again. So basically, since back here in July, you really haven't moved too far off center. And I think if you look at your stock portfolio, you're probably seeing that to a degree. The resistance, if you get up and going, 30.48. That's the upper Bollinger Band. Why is that important? Because 95% of the time, the market's going to trade within those bands, and often, well, what I teach in my charting course is the first time you hit a band, be it to the downside or the upside, that's where I think pros take some money off the table. That is not a trend changer. It's a major resistance point, up or down. So that's where I'd look for the resistance in the market. Momentum is still bullish. So I have a market that's in an uptrend. The bias is up, and I define bias as where the market closes in relation to the 18-week average of closes. It's over it, bias up, momentum still up. When we come to the NASDAQ, same thing. Higher lows higher high, honing in right now on that 80.38 level, which is the upper Bollinger Band. That's what I'm looking for resistance. On stochastics, I don't look to see on a weekly chart if they're overbought or oversold. Simply look on weekly charts. Are they pointing up or down? Still pointing to the upside, trend up. Dow Jones, higher lows, higher high. We don't know where this high is going to peak out. We've got resistance at 27,555. The market's fighting a battle similar to the S&P time and time again at this 18-week average, and I'll say it one more time. Your portfolio, if you've got the Dow 30 in it, probably hasn't gone anywhere in a while. Same in the Russell. You know, the daily charts look a lot worse than these weekly did, but this market still has layers of resistance here. Why? Well, if you take a look at the settlement, you've settled 1537 and a fraction over the 18-week average. If the market can continue up from here, the 100-week average at 1563.70 is the next resistance, and then after that, the 1604 level. The trend up, higher lows, higher highs. To turn the trend down, you would have to, on this particular chart, if we take a look at it, have to break through this low under the Bollinger Band. I'm not saying it can't be done, but it would need a real piece of bear news to do it. Then the sleeper has been the VIX. On the weekly chart, it's in a downtrend. Lower highs, lower lows, and it's still drifting to that downside. The trend is down in the market. That's friendly the stock market till it turns up. When we get to the 10-year note, this is what I call a real sloppy chart. You've got a lower low, a higher high. The momentum is measured by the slow stochastic down, yet the bias is up because you're over the 18-week average. And you're 2 weeks away from the next FOMC meeting where there's a high probability, according to the CME Fed Watch page, that the Fed will still cut interest rates. When we get to TLT, the chart picture is a little different, not materially, but little. If you take a look, remember at the notes, you had the higher high, lower low. TLT has lower highs and a lower low, so that's bearish. It's countered by the fact the market hasn't been able to close under the 18-week average and momentum is down. Close under that number, and that number is 138.83, then it joins the bear parade on the market. In the dollar index, this is a bearish pattern. Lower highs, lower lows, under the 18-week average, momentum down. Till this market gets over that last rally high, this could be a watershed event where for those looking for the long term to finally kick in the dollar index, it's got the makings of it on this chart. You'd have to get on the current pattern back over 99.30 to prove that wrong. At the same time, the eurocurrency is flipped to the upside. Higher lows, higher highs, over the 18-week average as I'm talking. Bull trend, bias up, momentum pointing up. Mexican peso, bull trend, higher lows, higher highs. Yes, it's at the second resistance level. It paused at the first one right here, the 18-week average. Next this, if the market can catch a bid in it from here, the upper Bollinger Band becomes the possibility. Support back between the 100-day average and the 18, you'd have to get all the way under that to break the trend of the market, which is in an uptrend. I wouldn't give you 2 cents for what's going to happen in the Canadian dollar as the election, I think it's next week, Monday, if I'm correct. And you don't have a trend going into it. You have a higher high, lower low. You have just been hanging at this 18-week average as the market is coming to grips with who might win, what does it mean, will they have a good coalition with them, how's it all going to work out. Right now the polls, Mr. Scheer, I believe, is leading Mr. Trudeau by a percentage or two, and you know polls, that's the margin of error as I see it. In the Japanese yen, trend is what? Well, we have a higher high. I don't know if that's the lower number there. Whenever you have this pattern, you had an outside week up, and if you take out the low of an outside week up, in the week following or the week after that, it's a 2-bar period. When that happens, my rule is that the market often goes to the closest moving average, in this case it would be down here, or the nearer of a Bollinger Band, right here. And the market seems to be making a run towards that one. Bitcoin, still very much in a downtrend, lower highs, lower lows, under the 18-week average. This trend gets negated to the downside if you get up and over 88.50. So until that occurs, still to the downside. In the differential between Brent and WTI, the daily charts have been looking in favor of the Brent, but the weekly is still favoring what? The market falling. That means it's favoring excuse me, that the difference between the two keeps narrowing in. And when you come to the Brent, you had that one spike up and then bang, it just fell apart. So you got a higher high, lower low pattern. That's not a trend to me. The market's got downside bias, momentum still pointing down. WTI crude failed miserably, just like Brent did when it got to the 100-week in the upper Bollinger Band. Same in WTI. Right down back here. Now, if you get over last week's high, that could negate this downtrend at this point in time. So we'll see what gives, but at this point, the bear's controlling that market. In gasoline, you have higher lows, higher highs that is nullified because the bias remains down. You're under the 18-week average, even though momentum is trying to turn up. Heating oil, lower highs, higher lows. I don't see anything there. I see pretty stiff resistance at 201.24 to 88 and support now 3 weeks in a row at the 18-week average. Get up and over this 197 zone, and I think traders will say this market's ready to move into that resistance zone if it can get up there. You know, one of the things I enjoy doing is in the mornings for my subscribers, I start recording at about 6 in the morning a video for them. By 5:15 in the morning, I've already read what's going on in Asia, Europe. I've read a bunch of newspapers, name it. I've done a lot. And what I'm trying to do is bring my morning trade up to date for you. So let's assume the first thing you do is you have your cup of coffee in the morning and you say, okay, what is the market looking like? What's Ira thinking of the chart action in these? I'm going to review 40 charts on futures, 5 ETFs. What you get from me each morning. I'm going to bring you up to date on the fundamentals. Then I'm going to give you full detailed technical analysis, way beyond what you're seeing in these videos. Points of entry, exit, objectives, where to get in, where to get out. I'm going to be right, I'm going to be wrong, but I'm going to have a discipline. And I'm going to cover all these markets in this exact sequence. Now, for those of you on our website viewing this, you'll be able to drag your slide bar on the recording and it's going to light up metals, soft commodities, energies, wherever section you're in. That's too difficult. You'll be able to click aside here. For those of you that get the included mobile app with it, and it does come free. It's a $40 value from us. You get the quotes and everything. I use push notification, not even a text. You'll know right away as soon as it's published. All you need to do is push the notification. The video is going to start playing for you. It's that simple, and you'll be able to get live quotes and everything else that you want, depending on how you set up your QT Mobile. It is free from us as part of this. $7.95 for 30 days. The whole purpose is to introduce you to what I'm doing and see does it fit in your style. If it does, this might be something you're looking for. Don't waste your time if you're looking for me to tell you the long-term trend. It's not day trading, I promise you that. It's more the swing trade, trying to catch that move in the market. But you know what? It's even better than that. I'm telling you things not to do, and I'm trying to be a disciplinary for you with your own trading. So if you think this might work, what do you got to lose? 26 cents a day for 30 days? Go to www.iraepstein.com under the word research, hit morning subscriber video. You can see it there. You can get all of our packages too. Just look at our research part and you'll see what that comes in at. You can click here if you're watching me on YouTube. It'll take you there. I'm Ira Epstein. You have a great weekend. I'll see you Monday.